So, understanding the concept of audit of consolidated financial statement, identify the responsibility of the parent and auditor in consolidation financial statement, gain the knowledge of the audit concentration during the audit of the consolidation statement, recognize the manner of permanent consolidated audit adjustment and current period of consolidation adjustment, down the reporting requirement as per the given circumstances, understand the audit groups and share the statements including the work of component auditors, understanding the interpretation of SA 600 using the work of other auditors. The chapter reviews the audit of CF as responsibility of the parent company, responsibility of the auditor. Auditor consideration, permanent consolidation adjustment, and current period. Auditor CFS management representation, auditor CFS reporting, SA 600 using the work of another auditor. CA is a statutory auditor of a manufacturing company whose financial statements are required to be prepared in accordance with the requirement of Indians. At the time of planning of the audit of the current year, it is noticed by him that such a company of which he is an auditor has purchased shares to another company occurred in USA. He further inquired into the management, found that all the shares of US-based company were purchased by the Indian company. Section 129 Companies Act immediately come into his mind. Other provision regarding the consolidated financial statement would apply in this case. Since the Indian company has acquired all the shares of the another company, since the financial statement required to be consolidated, gathering further insight, it became clear to him that financial statements of the Indian companies are required to be consolidated as a wholly owned subsidiary. Now, he had another recurring anxiety in this matter, whether the foreign subsidiaries are covered under the scope of consolidated financial statement. Exhaustive reading in the India's 110 on the consolidated financial statement come to his help, and it becomes clear to him that the parent, which represents consolidated financial statement, should consolidate all its subsidiaries, domestic as well as foreign. The management of the company was informed to prepare and groundwork for the preparation of consolidation financial statement in accordance with the statutory provision and applicable accounting standards. While considering the financial statements, the management was caught in a dilemma. What the financial statements are going to be consolidated for the first time. However, Indian parent companies acquired all the shares of the foreign subsidiaries in the month of June. The question arose as to from which day the consolidation is required. It is required from the whole year or from the date of acquisition of shares of the foreign subsidiary. Management turned to the help of India's for help. It becomes clear the result of the operation of subsidiary was included in the consolidated financial statement from the date in which the parent gained the control of the subsidiary. The consolidation financial statement were made ready by the management by combining like assets, liability, income, expense of the parents in which the foreign subsidiary. There is no minority interest involved. While auditing such groups, financial statement prepared by the management comes to for the accounts of a foreign subsidiary was unaudited. CA Vikrant caught on the catch section 22. How would we proceed? What is the implication of unaudited accounts of the component include the group financial statements and the consolidation would apply in such case? Introduction. The consolidated financial statements are the financial statements of the group which assets, liabilities, equity, income, expenses, cash flows of the parents and subsidiaries are presented as the single economic entity. In other words, consolidated financial statement present financial position of the entire group including the parent and its subsidiary company, whereas separate financial statements presented in the financial position of a single entity for which the financial statements are prepared. The consolidated financial statement provides a complete overview of an operation and profitability of the entire group, which is controlled by a management. Financial statement of the parent company, consolidated financial statement of the group, and final statement of the subsidiaries. In the above diagram, the one parent, that is MNO Limited, having two subsidiaries ABC Limited and XYZ Limited. The auditor of the MNO Limited is SS Maheshwari and Co. And the auditor of ABC Limited and XY Limited is RTA Associates. Further, it was decided that SS Maheshwari and Co. will act as a principal auditor, that is, auditor or reporting responsibility in respect of the consolidated financial statement of the group. Now, the management of all the three companies responsible for preparing the respective standalone financial statement, which shall then be audited by the representative auditor. Thereby, the parent company shall prepare the consolidated financial statement of the group. Once the consolidated financial statements are prepared, such financial statements are audited by the principal auditor. Now, we need to consider the following points. The responsibility of the parent company in considering the financial statements. The manners of permanent adjustment and current period consolidated adjustment. Manner of permanent adjustment and current period consolidated adjustment. the principal auditor procedure, and a consolidation of division responsible for both auditor and reporting. The consolidation financial statements are presented to the extent possible in the same format adopted by the same format as adopted by the parent of the separate financial statement. The format of the present preparation of a parent balance sheet, statement of profit and loss account, statement of change in equity, if applicable, are prepared under the Schedule 3 of the Companies Act 2013. Consolidated financial statements, consolidated balance sheet, consolidated statement of profit and account, consolidated cash flow, consolidated statement change in equity if applicable, and any explained note annexed to inform further. An entity which requires consolidated statement either under the law regulation governing entity sudo motu may be required to otherwise engage in the auditor for conducting an audit of consolidated financial statement. However, the law regulation governing the entity may require consolidated financial statement to audited by the statutory auditor of the entity. That is auditor who is an audit standard of financial statement of the entity. The guidelines of the audit of financial statement provide guidance on the specific issue, audit procedures to be applied to an audit of consolidated financial statement. Guidance note cannot be used while the auditing consolidated statements prepared by the special purpose to the extent of applicable, but it does not deal with the accounting manner arising from consolidation of financial statement. Accounting Standard AS 21 Consolidation Finance Statement and Indian Accounting AS 110. The Consolidated Finance Statement lays down the principles and procedure for presentation of Consolidated Finance Statement under AS and in AS respectively. In other words, the parent decides to do or it's required to prepare the present consolidated financial statement, it should do so in accordance with the requirement of applicable accounting standard under the relevant financial reporting framework. Consolidation financial statement mandatory under Companies Act 2013. According to Section 129, the Companies Act, where the company has one or more subsidiaries, including associate company, joint venture, each in addition to one of the financial statement, the preparing consolidated statement of the company of all the subsidiaries, same form and manner as it were. For Section 129(4) of the same Act provided that the provision applicable to the preparation, adaptation, audit of financial statements of the holding company shall mutatis also apply to the consolidated financial statement. The consolidated financial statement shall also be approved by the board of directors before they are signed on behalf of the board, along with the standalone financial statement. Also, shall also be laid before the annual general meeting of the company, along with laying of standalone financial statements. The company also shall also attach, along with financial statement, separate statement containing standalone features of financial statement of subsidiaries AOC 1. According to the Companies Act 2014, the consolidated financial statement of the company shall be made in accordance with the provision of Schedule 3 of the Act and applicable accounting standards. However, the company which is not required to prepare the consolidated financial statement under the accounting standard shall be sufficient if the company complies with the provision of consolidated financial statement provided under Schedule 3 of the Act. However, the requirement related to preparation of consolidated financial statement shall not apply to the company if it meets the following criteria: its wholly owned subsidiary or its partially owned subsidiary of another company, and its other member include that those who are not otherwise entitled to vote having been intimated writing and having been intimated in writing for which proof of delivery such intimations are available, but the company do not object the company not presenting consolidated financial statement. In a company whose securities are not listed or not in process of listing or any other stock exchange, whether in India or outside India, its limit or any intermediate holding company file consolidated financial statement with the register with compliance with the applicable accounting standards. As per the subsection 6 of the Companies Act, Section 129 of the Companies Act 2013, central government may, on its own, an applicable application for a class and class of companies by notification exemption any class or class of companies for complying with any of the requested under Section 129 of the rules made there. If it is considered necessary to grant such exemption in the public interest, and such exemption may be granted either unconditionally or subject to such condition as may be specified notification. Thus, a company having subsidiaries which has previously never prepared consolidated statement, they prepare their consolidated statement in adherence with the mandatory requirement. This will provide the holding company stakeholder more transparency about the company's business. Further, an investment entity need not present consolidated financial statement. It is required. It is accordance with the percentage of 31. India is 110. It will measure all subsidiaries of the fair value to profit and loss account. And balance sheet determine whether it is an investment entity. An investment entity is an entity that obtains funds from one or more investors for purpose of providing those investors which investment managers managing services. Coming to those investors, that is business purpose is to invest funds solely for the term for the capital acquisition, investment income, or both. Measure the evaluate the performance of the substantially all the investment on the fair value basis. However, as per section paragraph 33 upon 10, the partner of the investment entity shall consolidate all its entities in control, includes controlling through its investment entities exactly, unless the parent itself is an investment entity. The parent limited acquire 51% of the child limited during the financial year 31 during the financial year. 20% of the child limited sold by the parent limited. The parent, while preparing the financial statement for the year 31/3/2021 and 31/3/22, did not consider the financial statement of child limited for consideration. And the credit auditor, how did he deal with it? Explanation provision as per IND-AS 110. There is no such exemption for temporary control or for operation under the service long-term funds transfer restriction or considerations mandatory as IND-AS compliance financial statement in the case. However, as per section 129 of the Companies Act, where a company having a subsidiary which is not required to prepare for consolidated financial statement under the applicable accounting standard, it shall be sufficient if the company complies with the provision of consolidated financial statement provided in Schedule 3 of the Act. Conclusion: in the given case, the partner limit acquires 51% child limit during the year ending 31/3/21, March 31, and sold 20% during the year ending 31/3/22, March 22, March 2022. Parent limited did not consolidate the financial statement of the child limited for the year 31/3/21 and 2022. The intention of the parent limited is to quite clear that the control in child limited is temporary. As a formal company dispose of the acquired shares in the next year of the purpose, the parent limited is required to prepare consolidated financial statement. So, according to company prepare consolidated statement in accordance with the NDAs 110 as exemption for the temporary control or for the operation under the severe long-term fund transfer restriction in availment of the NDAs 210. Paragraph 20 of NDAs 110 states that consolidation of an investee shall begin from the date of investor and obtain the control of the investee, and in case where the investor loses control of the investee. Responsibility of the partner. Responsibility of the preparation and presentation of consolidated statement, among other things, it is not the management of the present, which means identifying the component, identifying the financial information of the company to include the consolidated financial statement. Now, where appropriate, identifying reporting segments to segment reporting, identifying the related parties and related party transactions for reporting, obtaining accurate and complete financial information for components, making appropriate consolidation adjustment, harmonizing the accounting policies and accounting framework, and gap conversation where applicable. Apart from the above, the parent originally issues instruction to the management of the component specifying that parent requirement relating to financial information of the component to include the consolidated financial statement. The instruction ordinarily covered the accounting policy to be applied, statutory and other disclosure requirement to be applied to prevent, including identifying of the reporting of reasonable reporting requirement and related parties and related part transaction and reporting timeline. Responsibility for the auditor of the consolidated financial statement. NDA is 129.4. The Companies Act 2013 requires that the provision of the Act applied to the preparation or adaptation of the audit of financial statement of the holding company shall mutatis apply to the consolidated financial statement. Besides other matter, the principal auditor of the consolidated financial statement is responsible for expressing an opinion on whether the consolidated financial statements are prepared in all the material aspects and as according with the financial reporting framework under which the parent prepares a consolidated financial statement in addition to reporting the additional matters as required under the Companies Act of 13 or any other statute of the extent applicable. Therefore, the auditor objective in the audit of consolidated financial statement. to satisfy himself that the consolidated finance statement have been prepared in accordance with the requirement of the applicable financial reporting framework, to enable himself to express an opinion on a true and fair presentation of the consolidated statement, to inquire into the matter of specified section 143(1) of the Companies Act 2013. The report on the matter given on the clause A and 131.3 of Companies Act and section and another matters of section 143 read with the rule 11 of Companies Act Audit and Auditors Rule 2014 to comments on the matter specified under sub-rule A, B, C, D, E, F, G of the external policy. Auditor should also validate the requirement of preparation of CFS for the company as per applicable financial statements. Standard of auditing, standard of guidance on auditing matters issued in the Institute of Chartered Accountants of India, applying the same as audit of consolidated financial statement as they apply to the audit of standard financial statement. It means that the auditor, while conducting an audit of consolidated financial statements, are entirely experts to plan their work to enable them to conduct an effective audit and an efficient and timely manner. Obtain understanding of the accounting, internal controls, and including IT system and consolidation tool sufficient to plan the audit, determine the nature, timing, extent of audit procedure, such as understanding the would help the auditors to develop an effective audit approach. Use professional judgment to assess the audit risk and to design the audit procedure to ensure that the risk is reduced to an acceptable level. Audit consideration. The following reference to the consolidated financial statement have an impact on the related to the audit procedure. The consolidated financial statements are prepared on the basis of separate financial statement of the parent and its component using the consolidated procedure prescribed by the accounting standard and are under applicable financial reporting framework, and the auditor of the consolidated financial statement generally report in the matter pertaining to the component on the basis of auditor report the respective component. Accounting Standard 21 Consolidated Financial Statement and Accounting Standard 27 Financial Statements Interest in Joint Venture or Indian Accounting Standards India is 1110 Consolidated Financial Statement Indian Accounting Standard AS 111 Joint Agreement Indian Accounting Standard 112 Disclosure of the interest of other entities and Indian accounting standards and entities. Indian Accounting Standard 28 Investment in Associated Joint Venture. Indian Accounting Standard 21 Consolidated Finance Statement. Accounting Standard 23 Accounting for Investment in Accessory in Consolidated Finance Statements. Accounting Standard 27 Financial Reporting of Interest in Joint Venture or Indian Accounting Standard 112 Consolidated Finance Statements and Indian. The auditor of the consolidated financial statement may use a word of other auditors as per required of the standard on the auditing unless the auditor of the consolidated financial statement is also the auditor of the other components of the group. The consolidated financial statement, including intermediate consolidated financial statement, preparing under the separate financial statement, the parent and the component also under the financial information, which might not be covered by the separate financial statement and the entities. Other financial information would include a disclosure made in the consolidated financial statement about the components, proportion of items include the consolidated financial statements to which different accounting principle has been applied while permitted, adjusted and made effective of significant transaction or other event that has occurred between the financial statements of parents and components, as the case may be, etc. This is other financial information would be required to be additionally disclosed. When an auditor accepts an audit of consolidated financial statement, the auditor should pass us whether based on the work done, he will be able to express an opinion on the true fair of the presentation of consolidated financial statement. The auditor of the view that his own preparation may not be enough or sufficient, he would consider using the work of another auditor. Consolidation statement in group A and entity group contains A entity A and subsidiary B and C. B has a loan of A 100. So profit PPE 100 PVC total 180 eliminates and group. Share subsidiary is 500 intercompany receivable 100. So eliminates 500 receivable 400 300 so 700 intercompany PV 300 minus 100 so elimination 100. And the debt minus 100 minus 50 minus 30, so 230 280 minus 280 equity 600 300 200 1100, so out of is 500 they found. So elimination, so 600 300 500. Accounting standard is 11 joint venture, a joint agreement. The accounting standards, standard 115 disclosure of interest on other entities, and accounting standard India is 28 investment in associated joint venture. Intermediate consolidated finance statements and consolidated finance statement on the intermediate parent, example company A is one subsidiary company B subsidiary company C. In the case B in the intermediate partner, and a consolidated finance statement required by the B in intermediate consolidated finance statement. So, the auditors might be statutory auditor separate financial statements of one or more of the components of auditor, opponent specifically processing the auditor of the consolidated financial statement, where the statutory auditor one or more of the component of the parent who also reduce requested to assist the principal auditor. The work will be performed by such statutory auditor by use of the principal auditor should constitute assigned separate from of assignment to conduct the statutory audit in the respective component. Standard on auditing says that using the work of another auditor. Established standards when the auditor reporting the financial statement of the entity, the group, in the case of consolidated financial statement, uses the work of another auditor on the financial statements of one or more of the components, including financial statements of the entity. Para 2 of SA 600. The principal auditor, if he decides to use the work of another auditor relating to the audit of the consolidated financial statement, should comply with the requirement of SA 600 to carry out the audit of standard financial statement component of materiality and purpose of issuing the opinion of standard financial statements. Each component would be done component wise in the standard basis. However, regarding the determining of materiality during the audit of consolidated statement, auditors should consider the following. Auditors are required to complete the materiality of the group as a whole. Materiality should be used to assess the appropriateness of consolidation adjustment, that is, permanent consolidation adjustment or a current period consolidation adjustment that is made by the management in the prescribing of cash flow statement. The partner auditor, the parent auditor may also use a materiality computed on the group level to determine whether the component final statements are material to the group or determine whether they use as a scope of additional component or consider the use of the work of another auditor as applicable. The parent rights also the materiality component of the group level to determine whether the component of financial statements are material to the group or determine whether they should scope the additional components and consider using the work of another auditor as applicable. The principal auditors also compute the materiality for each component and communicates to the component auditor if he believes it required to use a true and fair view of cash flow statement. The principal auditors obtain certain confirmation from the component auditor like independence, code of ethics, certain information required with consolidation, disclosure requirement. However, while considering the observation for the instance of modification on the purposes of matter accordance with section 705, 706, the component auditor in the report on the standalone financial statement, the principle of SA600 need to be considered. The ICA issued an announcement date 25th of May 2017 which amends the paragraph 17 of the guidance note states that by considering the observation for the instance modification or emphasis of other matter accordance to the SS 706 or 705, the component auditor is the component English report on a standard of finance statement. The parent auditor should comply with the requirement of SS 600 using the work of another auditor. Therefore, the concept of materiality would be considered while considering the observation of the component auditor. Auditing the consolidation. Before commencing the audit of consolidated financial statement, the auditor should plan his work to enable him to conduct an effective audit in an efficient and timely basis. Auditor should make plan among other things for the following: understand the group structure, group-wide control, including assignment of information technology system, related general applicable IT charter controls, manual automated consolidation system. Understand the accounting principles of the parent and its component as well as of the consolidated process, including process of transaction of financial statements or business component. Determine the programming of the nature, timing, and extent of the audit procedure to be performed based on the assessment of the risk of material misstatement in consolidation of the matters. Determine the extent of the use of other auditors' work in the audit, and coordination of work will be performed. The parent, while present the consolidated financial statement, is required to consolidate all the components in the consolidated financial statement, other than those in which exception has been provided in the relevant accounting standard under the applicable financial reporting framework. Auditor should obtain a listing of all the components, including consolidated financial statement and review of the information provided by the management or by the parent identifying the components. Auditor should verify that all the components has been included in the consolidated statement unless this component met criticism for exclusively. The respect of completion and of the information, the auditor should perform the following: review the working paper of the prior years for the known component, review the parent's procedure for identifying various components, make inquiries by of the management to identify the new components of the any components which goes out of the consolidated statement, review the investment on the parent as well as the components to determine the shareholder other entities, review the joint venture and the joint arrangement if applicable, review the other arrangement entity entered into the parent that may not be included in the consolidated statement of the group. Review statutory records maintained by the parents, for example, registered under Section 186, 190 of Companies Act. Identify the changes in the shareholding and the matter in which takes place during the responding period. Auditors should document procedures performed by the assessment completeness of the component with consolidation. There will be various means by which joint control, significant influence can be obtained. In the regard, the auditor may verify the board minutes, shareholder agreement entered into by the parent, agreement with the entity in which the parent might have provided any technology or know-how, enforcement of the statute as the case may be. The auditor should also review the minutes of the meeting of the board director subsequent to the year-to-year, understanding that there has been any liquidation of investment, any further investment has been made, and has been provided further evidence to understand the control means with temporary nature of otherwise. Where there is a component is excluded from the consolidated statement, auditor should examine the reason for the exclusion and whether such exclusion is conformed with the applicable financial reporting framework. For example, under the Companies Act, Accounting Standard Rules 2006, but there have been two reasons for exclusion of subsidiary: associate, jointly controlled entities. Once this relationship of the parent of the subsidiary, an associate of the jointly controlled entity entered into the temporary as subsidiaries. Associated with the joint venture operates under the severe long-term restriction, which significantly impairs into ability to transfer funds to the parent. Similarly, under the Companies Act of 13, intermediate subsidiaries in India is not required to present consolidated financial statement if the company meets the following conditions. It is a wholly owned subsidiary, as it's a partially owned subsidiary, and another company and all its other members, including those not otherwise entitled to vote, making him intimate writing and which proof of delivery of intimation available within the company to not object in the company not presenting consolidated statement. So the as for the company, intermediate subsidiary in India is not required to present the consolidated statement. The company meets the following: they are not required. It is a company whose securities are not listed, they are not required, and are not process of listing, they are not required to have consolidated statement of any stock exchange, whether in India or outside India. It is a limited, it's ultimate or a intermediate holding company. So, if I consolidate financial statement with the register with the complaints with the applicable fraction, they give not required to file a consolidation. India is one and also prescribe certain criteria which consolidated statements are not required. In the case, auditor should satisfy himself in the exclusive method of management fails within this criteria. Example, in the case of entity which is excluded from the consolidation on the ground on the relationship of parents in other manner of subsidiary, associates or joint venture member. The auditor should verify the intimation of parents, dispose of the time of acquisition of subsidiary, making investment in associate of joint completely controlled entity. The auditor should also verify that the reason for the exclusion is given in the consolidated statement. If the entity is excluded from the consolidated statement for the reason other than that allowed by the applicable financial reporting framework, the auditor should consider the effect on the auditor's report to be issued. Auditor should examine whether there is any change in the status of the component. Example, subsidiary to associate, a joint venture to associate, or vice versa. Auditor in such a case that examine whether the changes has been appropriately accounted by the consolidated statement and required to the relevant accounting standard NDAs under the applicable financial reporting framework. In preparation of consolidated financial statement, accordance with the Companies Act, or the Company Standard Accounting Standard rules and things, the financial statement of the parent and the subsidiaries are combined with a line by line based on adding together like items of assets, liabilities, income, expense, cash flows, and other certain calculations like termination of goodwill, capital reserve, minority interest adjustments like elimination of intergroup transaction balances and unrealized profits, etc., are made in accordance with the requirement of Indian accounting standards. 21. Consolidated statement investment in associates are content for using the vesting equity method and process accounting standard 223. Accounting of investment associates in a consolidated statement. The parent has an interest in the jointly controlled entity, reporting its interest in the consolidated statement using the proportionate consolidated methods. Accordance with the Accounting Standard 27. The financial reporting interest on joint venture. Many of the procedure appropriate to the applicable of the equity methods and appropriate consolidated methods and similar to the consolidated procedure set up by the Accounting Standard AS 21 consolidated statement.